Hello students, this is Dr. Chetna Kumawat. Today we are going to start a new chapter which is Funds Flow Analysis. In this chapter, we will understand the meaning of funds flow analysis, the concept of funds and flow of funds, sources and uses of funds, preparation of funds flow statements in which schedule of working capital changes, funds from operations and other things, uses or significance of funds flow statement, limitations of fund flow statement, graded illustrations, and some key terminology. Balance sheet and profit and loss account are two principal financial statements of a firm. These statements provide significant information about the firm to the owners, management, and investors. But these two financial statements are deficient in providing certain useful information required by the management of the firm for decision making. If the objective of the firm is to know what funds are available during the accounting period and for what purposes these funds were utilized, the financial statements fail to serve directly this purpose. But it is important to know about the availability and application of these funds for future planning. Hence, there is need of preparing a separate statement in addition to balance sheet and P&L account, which can provide information about different sources of funds and their various uses or sources of inflows and outflows of funds. Such a statement is known as funds flow statement. The other names by which funds flow statement is known are as a statement of sources and application of funds, where got, where gone statement, statement of changes in financial position, and funds statement. In India, the Institute of Chartered Accountants has issued an accounting standard AS3 for preparing and presenting the statement of changes in financial position on working capital basis. But it has issued Accounting Standard 3 revised in place of it in March 1997, which is on cash and cash equivalent basis, and the working capital definition of funds has been completely discarded. The funds flow statement with funds defined as working capital is now of merely academic interest in the sense that an enterprise is required to prepare a cash flow statement which is mandatory from April 1st, 2001. Meaning of funds flow statement. Funds flow statement is a summary report of financial operations of a business firm which brings into light the changes in financial items of balance sheets prepared at two different dates. In other words, funds flow statement reveals the sources from which funds were obtained by the firm and the specific uses to which such funds were applied. The effectiveness of financial management in procuring funds from various sources and using them effectively for generating income without sacrificing the financial health of the firm is reflected in this statement. A few definitions of funds flow statement are as follows. FOG-RA, a statement of sources and application of funds, is a technical device designed to analyze the changes in the financial conditions of business enterprises between two dates. Anthony Aaron states that funds flow statement is a statement prepared to indicate the increase in the cash resources and the utilization of such resources of a business during the accounting period. Armand Coleman says that the funds flow statement is a statement summarizing the significant financial changes which were occurred between the beginning and the end of a company's accounting period. Accounting Standard Board of ICAI says that a statement which summarizes for the period covered by it the changes in financial position, including the sources from which the funds were obtained by the enterprise and the specific uses to which the funds were applied. Thus, funds flow statement is not a statement of financial position at a particular date, but it is a report of financial operations, changes, flows, and movement of funds. It is not a subsidiary schedule of balance sheet like P&L account or appropriation of earnings, but a supplementary statement and provides such information which are not available in other statements. Concept of funds. The word funds is used and interpreted in different senses in funds flow analysis. Therefore, the concept of funds requires a proper explanation to provide a better understanding of the significance of funds flow analysis in a crystal clear manner. The term funds has a variety of meanings such as cash funds, capital funds, and working capital funds. Cash fund. In a narrow sense, fund means only cash, and a funds flow statement prepared on this basis is called a cash flow statement. Such a statement portrays net effect of the various business transactions on cash and takes into account receipts and disbursements of cash. This concept of funds for preparing funds flow statement is not acceptable as there are many such transactions which do not affect cash but represent flow of funds. For example, purchase of furniture on credit does not affect cash but there is flow of funds. The increase in the cost of furniture is use of funds and increase in creditors is a source of funds. Capital fund. In a broader sense, the term funds refers to economic values expressed in money measurement. Hence, here funds means all financial resources used in the business, whether in the form of man, money, material, machines, and methods. The liability side of the balance sheet represents sources of funds and assets side uses of funds. Net working capital fund. In between the two extreme views on the concept of funds, the more popular view is the one relating to net working capital. Net working capital means difference between current assets and current liabilities. These are also called net current assets. These assets are constantly circulating during the business operations like cash to raw materials to finished goods to credit sales, that is cash on realization. Hence, funds mean not only cash but cash and assets to be converted into cash in near future and other claims. Therefore, stock, debtors, short-term investments, etc. are treated as equivalent to cash. As funds means difference between current assets and current liabilities, therefore, it is essential to know that what items of balance sheet are included in it and what items are excluded. With this view, The various items of balance sheet are classified into current and non-current accounts. Current accounts can either be current assets or current liabilities, whereas non-current accounts are permanent or fixed assets and long-term or permanent liabilities. Let's here discuss about some of the items. First, let's talk about assets. Non-current assets are such as goodwill, land, building, plant and machinery, furniture and fittings, vehicle, patents, trademark, long-term investments, preliminary expenses, profit and loss accounts loss, and discount on issue of shares and debentures. Current accounts or current assets are stock or inventory, temporary or short-term investments or marketable securities, short-term loans and advances given, bills receivables, debtors, advance tax, cash in hand and cash at bank, and prepaid expenses. On the other side, non-current liabilities are such as equity share capital, preference share capital, general reserves, securities, share premium, capital reserve, capital redemption reserve, profit and loss accounts profit, debentures, long-term loans, provision for depreciation, provision for taxation, proposed dividend, and underwriting commission. In current liabilities, we include creditors or accounts payable, bills payable, bank overdraft, outstanding expenses, short-term loans and deposits, provisions against current assets, income tax due, and dividends payable. Provision for taxation and proposed dividend may be treated current as well as non-current liabilities as discussed later on, but in no case provision for depreciation is not a current liabilities. So this was it for today's lecture. Thank you.